Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw, a senior market specialist at FXCM. Today is Wednesday, and it's the 7th of February. Hey, Kim, good morning to you. Pleasure to have you on the webinar as always. I'm just going to go ahead and bring up our disclaimers. We'll start off with the high-risk investment warning. Just got to get comfortable here. All right. Here we go. High-risk investment warning. I'll keep this on screen for a few moments. If you can just have a read through that, and then we'll bring our market commentaries disclaimer up next. Hey, Mia, good morning to you. All right, let's bring up the market commentaries disclaimer. Alrighty. Let's go ahead and take a look at that real rate. Let's go ahead and bring that up. Hey, Raj, good morning. Nice to have you on the webinar. Okay, so what did we say yesterday? Yesterday we said we've moved towards what looks like a resistance area. And the question is, of course, is this the apex of the yield? My personal opinion is we're pretty close to the apex. I don't see us going much higher than this. But of course, subject to correction, right? The question is, are we going to react off of the resistance? Okay, so the idea is we're at resistance. I'm just going to make this arrow red. And then, of course, are we going to push back down? Because if we can get some sort of swing going in the real rate, hopefully that will drive other market instruments that will make it tradable for us. Now, I'm looking to see if we're going to get a reference candle reversal here. This is the... Okay, let's just take a look at this level, this candle here. So this is yesterday's candle. And then what we're doing is we're looking to see if we can get a close below yesterday's candle. If we get a close below, then potentially we're going to have the swing on. And another indicator, of course, would be the RSI. And we want to see if the RSI perhaps moves below the 20 area. Okay, if it moves below the 20 area as well, we're getting that negative momentum in. So we've analyzed the real rate. It looks as if we've hit the resistance. What's the big deal here? Well, the big deal is that it tends to drive flows into and out of the US dollar, number one. Number two, it will have a time value of money relationship with the financial markets as well. So as per our method, what we'll do next is bring the US dollar underneath that. And we just want to see what's happening with the greenback. The greenback's been very strong. You can see it's been strong from this point to this point. Has been moving up. When there is some stress on the real rate, we do seem to get the US dollar at least leveling seems to at least be leveling. Okay, probably more from there. Yeah. So if we get the this leg moving here, are we going to get some sort of movement to the downside or laterally? You can already see that the US dollar is starting to show signs of pullback. Let's take a closer look at that. So let's take a look at the US dollar doing a top-down analysis. Hey, KD, good morning to you and welcome. All right, let's just. Hey, did you get my email there, KD? Just let me know. Let's go through to the US dollar and take a look at it from a top-down analysis. Okay, so bringing US dollar weekly up first. All right, so what we have here, look, it's only the beginning of Wednesday, right? So there's another 3 days worth of trade still to go. But it does look as if there is some weakness that's starting to seep in on the greenback here. And you see that? It's what we call a gravestone doji. It's a weekly chart. This candlestick hasn't completed. So the idea here is, does it maintain the shape into the end of the week? How does the shape change? But right now, it's moved up. It's hit the high, and that's where the bulls lost control. And now the bears have pushed it right back down. We flat for the week, but it seems as if the dollar is maybe in control here, just based on this candlestick. Now, the basic hypothesis, until proven otherwise, is that the rates will come down. Why is that the basic hypothesis? Because I think that inflation is very much under control. And if inflation's under control, the job's done, the tightening job's done. Let's loosen up, right? So if we're going to loosen up, the question is this some sort of dead cat bounce? So some sort of dead cat bounce here. So let's just take a look at this in a daily time frame. I'm just going to change this through to daily. And the way that I think we can look at this is perhaps some sort of flag. Let's just bring it up as such. Okay. Let's see if it... no, it doesn't really fit in, but it becomes more sort of wedge-like. If this is a wedge, then I think that if it's a wedge, okay, then it will come down as the real rates start coming down. There is an element of strength that came in on Friday. Friday was the non-jobs employment change. That was much stronger than expected, and that really lifted the greenback. However, I think that's a little bit of an outlier. I think that it's just like last year, the first jobs number of the year, the January number, tends to have a lot of seasonal adjustments into it. If it's got that seasonal adjustments in, then I think potentially we're going to get a different picture come the next jobs number. Let's just see what's happening on the risk side of the market. Let's take a look at DAX now. Before we go to DAX, let's just take a look at the zones on the US dollar. All right, so let's just bring up US dollar zone analysis. All right, here's the resistance area that we've been looking at. Okay, it kind of has stopped dollar in its track, Just want to see if dollar slips back down from zone 1 into zone 2. I've got to be very careful here. Because my favorite scenario is the loosening up in the fixed income market, and the dollar following that loosening up down. Okay, that's my preferred scenario. But there's almost a first kind of real sign of the dollar weakening. Okay, and that's after Friday's sort of jump up. And I think Friday's jump, my personal opinion, an overreaction due to an outlier of a number. All right, let's go see what's happening on the DAX side of things. All right, so we'll start off with the DAX weekly. Let's go back there. Any questions about what we've covered so far? Just type those in if there's any questions. I'm just going to bring up the DAX chart now. Okay. You guys sort of understanding why there's going to be sort of, in my view, a loosening up of the fixed income market. And I think we just got to keep an eye on if that non-farm payroll was an outlier. Okay, just take a look at the DAX here. I like this chart a lot. It looks to me as if we're actually starting a swing here. I just want to bring the RSI back in. Okay, let's just bring the RSI back in. Okay, so here is the reference candle. This is the reference candle. So this is from a few weeks back. And then the third last candle completed that reference candle. It closed above the reference candle's high. And now it looks like after last week there was some sort of hesitancy. No, it looks like that risk on, okay? It looks like there is this risk on movement. I see your question there, Mia. All right. I want to just, before we go further, just want to explain. The non-farm payroll was exceptionally strong on Friday. The jobs number came in much higher than even the most aggressive estimate, almost double. Okay, we came in almost double what we estimated. Even the wage data came in double. That to me seems out of whack with the data we've been getting, Mia. So I think there has been a lot of seasonal adjustments over just over the last few months that always seems to creep in for the January non-farm payrolls. So I don't, even if you take a look at the non-farm payroll from last year, January, it was, I think, if I recall, a massive beat to the upside. It just seems much hotter than is what's plausible. And because if it's much hotter than is plausible, I think we're going to see much more moderate numbers coming in over the next few prints. So that's what I mean by an outlier. I don't think it's in the realms of normality. Does that make sense to you? Just let me know. Let's get back to DAX. And it seems to me that the market's kind of reflecting that. The market didn't really, besides the US dollar jump, and now that US dollar looks like it's starting to moderate again, the stock markets didn't look back. They're roaring on ahead. And if we take a look at the DAX zone analysis, so let's just bring that in. So, Mia, just let me know. Yeah, so it was affected effectively by the calculation. The calculation made adjustments, which I think are making it much stronger than what we have. Let me show you something here. Let me show you something interesting. Let's just finish up with the DAX. I want to show you. let's just bring up the DAX. Look here, this is the DAX zone, and look, just it was such a terrific candle yesterday. Such a terrific candle, and it's in zone 1. Okay, let's just go down to the daily chart now and see if we can synchronize let's go down to the hourly chart. Let's see if we can synchronize the hourly chart with the daily chart. Daily chart's looking positive, weekly chart's looking positive. Let's see what we would be looking for on the hourly for DAX, right? So let's just bring that up. Okay, here's DAX. Okay, so DAX is now in its upper quintile. The longer we hold that upper quintile, the stronger the DAX is going to be. So we had a nice cross yesterday. Okay, it crossed up over here and it's moved into that upper quintile. Once we get into that upper quintile, we've got a real swing on our hands. So as long as we maintain in this upper quintile, I think that the DAX has got this this bullish move behind us, and that's very much would be in line with the longer term daily, longer term weekly charts. I wanted to show you something. If we take a look at just one data fact, just going back to non-farm payrolls, just go look at hours worked. Let's see if we can bring this up. Hours worked. No, that's not the series. Weekly hours. United States average weekly hours. Yeah, this is what we want. Okay, so you can just see that the weekly hours, let's just make it, is really coming down here. Okay, so what we're seeing is that weekly hours are declining. Now, typically what happens is companies don't lay off. They don't like firing people, so they don't lay off people, but they cut down on their hour shifts. The shifts get cut down. So if shifts are getting cut down, how does that jump in non-farm payrolls factor in? So there's a bit of sort of ambiguity in the data, and I believe that the lower hour is probably correct. I think the non-farm payroll is the seasonally adjusted number. All right. Katie, do I have the Burberry chart? We can take a look at Burberry. So in Trading View, let's see if we can find Burberry. It's not one that I look at all that often, in fact. Okay, so here's Burberry on the London Stock Exchange. Is that the chart that you're looking at, KD? Burberry on the LSE. So if we're looking at that, corrected now. Oh, I haven't shared the screen. Here we go. Sorry about that, Katie. Can you see it now? As you can see, it's really just moving in that southeasterly direction. We go through to the zone analysis. Let's bring it up. So the weekly chart is very weak there. If it drops back into zone 3, I think that would be an indictment on it. Okay. Another chart actually that's worth just bringing up is a chart that really is embracing the AR story, and that is Palantir. So if we take a look at Palantir, which is really in the news now. If you just do a Google for Palantir, you see that the results were really good for Palantir. It's the sort of perhaps the next share to really kind of be impacted in a positive way by the AR story. And you can see how it's, take a look at this on a daily chart, is gapped up. So Palantir, one that is now really embracing the AR story. And if you take a look at NVIDIA, let's bring up NVIDIA. Okay, you can see NVIDIA, the other stock, which is really encompasses the AR story, moving now at $682 per share. That's the price. So the AR story very much in vogue at the moment. And then you take a look at a company like Burberry. Burberry is just getting sort of pushed right down. So the trends are completely different. Whilst the AR stories are moving in that northeasterly direction, you had that Burberry stock that was going in that southeasterly direction. Very, very different. Very, very different there. All right. Any other charts that you guys want to see? Any other charts that you guys want to take a look at? Let's just take a look at the NASDAQ 100 just to end off. Okay, so the NASDAQ above the 30-week exponential moving average. Okay. The moving average. Yeah, so the AR story, so Anna's going overbought. Okay. NVIDIA is really getting, I guess there is a emotional attachment to the artificial intelligence story. And that's obvious because the RSI has moved into that overbought territory. And the question is it getting ahead of itself? Is it getting, as long as the fundamentals can support, the price earnings ratio, then so the higher the price earnings ratio, the more the market expects out of it, the higher the sort of growth that is expected. So we'll have to, the problem that NVIDIA is going to have is not really a demand problem, it's a supply problem. Can it keep up with demand? The fact that it's overbought, yeah, I think that there would have to be some profit taking, there'd have to be some pullback. But I think that dip would be very interesting, Anna. And I'd like to see if there is any support around that dip. So she's saying, could it turn out to be another Tesla? Potentially. The answer to that's potentially, of course. Okay. NASDAQ, we'll just end off with taking a look at the NASDAQ zone analysis. Yeah, it could be, I think, compared to Bitcoin. Yeah, got to be careful there. Yeah, absolutely. So you've got NASDAQ in zone 1. And then if we just take a look at the hourly chart for NASDAQ 100, there would have to be a positive crossover here in the stochastic, and there would have to be a positive crossover here. And if we get a positive crossover there, then potentially the NASDAQ moving in that direction. Let's just take a look at NVIDIA. Let's just take a look at NVIDIA. I want to take a look at it, sorry, not on the hourly. Let's just take a look at it on the, let's take a look at it on the weekly. So what Anna's saying is just got this overbought condition here. So at some stage, this will have to clear. And if we go down to the daily chart here, Anna, there's actually sort of a little bit of a divergence coming in. So perhaps there's going to be a break in the AR run, just as everyone's talking about it. Perhaps the market dips. Then it's all about whether the support comes in, and we're going to have to see if that's going to take place. Any other companies that are part of the AR story? So I guess, let me do some research. There are actually AR ETFs. There's some AR ETFs. Let me get a list of the AR ETFs, and we'll go through that tomorrow. Okay, we'll see how they're doing in terms of the indicator. How overbought are they? So I think that's the best way to look at it with the ETFs. Sorry, I wasn't sharing the screen. Okay, a little bit of a divergence coming in there. Okay, that's the NVIDIA daily, and then if you take a look at the weekly or so, I think it's good. See the difference with a weekly chart. The weekly chart, it's difficult to know when it's going to correct. It's difficult to know when, but the daily chart, I think, is a little bit more worrying. I think there is a case to be made that there should be some sort of normalization there of the oscillator. So let's keep an eye on that and see if that is in fact the case. All right, I think let's leave it there. If you, and a great evening ahead. And then tomorrow, let's take a look at some AR ETFs and see where they are in terms of the RSI. One of them that we'll look at would be the ARK Innovation Fund, straight up. All right, guys, let's wrap up there. Thank you very much for your time today. Much appreciated.